Alright, listen up, because this week is not the time to be snoozing at the switch. We've got a convergence of market-moving events that could send shockwaves through your portfolio, and you need to be ready. I'm talking about a perfect storm of critical economic data, a tech giant's pivotal conference, and earnings reports from some of the most watched companies on the planet. The S&P 500 has been dancing above 6,000, but that's no guarantee of smooth sailing. This is the week where the market will either find its next leg up or get a serious reality check. Every single day holds a new piece of the puzzle, and you, the home gamer, need to pay attention to every single one of them. Why should you care? Because your money is on the line, that's why. This isn't some academic exercise. The news that drops this week will directly impact the value of the stocks you own. It will influence whether the Federal Reserve raises, lowers, or holds interest rates, which affects everything from your mortgage to your car loan to the profitability of the companies in your 401k. It's about understanding the battlefield, knowing when to buy, when to sell, and when to hold tight. This is your homework, and doing it properly is what separates the winners from the losers in this market. Don't be the one caught flat-footed. Think of this week as a series of major tests for the economy's health. We're going to get a temperature check on inflation, see how confident consumers are feeling, and hear directly from corporate titans about their outlook. Will consumers keep spending, or are they getting worried about prices? Will big tech continue its unstoppable AI-fueled rally? These aren't just headlines, they are fundamental questions that will dictate market sentiment for weeks, if not months to come. The answers we get will set the tone and could trigger some major sector rotations. You need to be prepared for the volatility. So buckle up, because we're diving deep. We're going to break down the inflation numbers that have everyone on edge. We'll look at what Tim Cook and Apple have up their sleeves to justify that massive market cap. We'll even check in on the wild world of GameStop to see what they're doing with their newfound Bitcoin stash. By the end of this, you'll have a roadmap. You'll know what to watch, why it matters, and how to position yourself for what comes next. Let's make some money. Booyah! Now let's talk about the 800-pound gorilla in the room, inflation. This Wednesday, June 11th, we get the May Consumer Price Index report, and I'm telling you, Wall Street will be holding its collective breath. This number is everything. It tells us how much more you're paying for groceries, gas, and housing. If that number comes in hotter than expected, you can bet the market is going to throw a tantrum. A high CPI reading spooks investors because it means the Federal Reserve might have to keep interest rates higher for longer to cool things down, and that's poison for stock market growth. The very next day, on Thursday, we get the Producer Price Index. Think of this as the prequel to the CPI story. The PPI measures inflation at the wholesale level, what it costs businesses to make the goods and services they sell to you. If producers are paying more for their materials, you can be sure they're going to pass those costs along to the consumer sooner or later. So, we'll be watching the PPI like a hawk for clues about where consumer prices are headed in the future. A spike here is a major red flag for the months ahead. All of this data is a prelude to the main event, the next Federal Reserve meeting, which kicks off on June 17th. The Fed governors will be poring over this week's CPI and PPI reports as they decide their next move on interest rates. Their mandate is to control inflation while keeping employment strong, and it's a delicate tightrope act. The market is desperately looking for signs that inflation is tamed, so the Fed can start thinking about cutting rates, which would be like rocket fuel for stocks. A bad inflation report this week could completely dash those hopes. And don't forget the consumer. On Friday, we get the preliminary June Consumer Sentiment Report. This survey tells us how everyday people are feeling about the economy and their own finances. If people are worried, they stop spending on big-ticket items, and that slowdown ripples through the entire economy, hurting corporate profits. We'll be watching to see if concerns about tariffs and persistent inflation are making consumers nervous. A drop in sentiment would be another bearish signal the market just doesn't need right now. This is a crucial piece of the puzzle. Switching gears from the economy to the tech titans, all eyes are on Cupertino this week. Apple's Worldwide Developers Conference kicks off today, Monday, June 9th, with the big keynote from CEO Tim Cook. This is Apple's moment to shine and prove it's still the king of innovation. For months, the narrative has been that Apple is lagging in the artificial intelligence race. This is their chance to change that story. We're expecting, no, demanding, to see some major AI announcements integrated into their operating systems for the iPhone, iPad, and Mac. This isn't just about a new feature, it's about their strategy for the next decade. The pressure is on. While other tech giants have been making headlines with their AI chatbots and infrastructure, Apple has been relatively quiet. Investors want to see a clear, compelling vision for how Apple will use AI to make its products more indispensable. Will they announce a groundbreaking partnership with another AI leader? Will they unveil their own proprietary large language model? The stock's performance hinges on delivering a wow moment. Anything less than a spectacular AI showcase could be seen as a massive disappointment and send the stock tumbling. This is a make-or-break presentation for them. Beyond Apple, the AI theme continues with key earnings reports. On Wednesday, we hear from Oracle. Remember, this is a company that's all in on the cloud and AI infrastructure. They're part of that Stargate joint venture with OpenAI and SoftBank, a multi-billion-dollar project to build out AI supercomputers. Investors will be listening intently for any updates on that project and for signs that their cloud business is capturing a bigger piece of the AI pie. Oracle's results will give us a read on enterprise spending on the foundational technology that powers the entire AI revolution. Then on Thursday, Adobe steps up to the plate. This is another critical AI play, but from the software and creativity side, Adobe has been embedding its Firefly generative AI tools into its flagship products like Photoshop and Premiere Pro. The big question is, are customers paying up for these new AI-enhanced features? We need to see strong sales and a bullish forecast for their Creative Cloud subscriptions. Adobe's report will tell us a lot about the monetization of AI. Are companies and creators actually willing to shell out more money for these powerful new tools? It's a key test for the entire software-as-a-service AI model. You can't talk about this week without mentioning the wild card, the one and only GameStop, which reports earnings on Tuesday. Now, this is no longer just a story about a struggling video game retailer. This is a saga. After the meme stock frenzy, the company has become a fascinating case study in corporate strategy. The most recent bombshell was their announcement in late May that they had purchased a staggering $500 million in Bitcoin. This is a massive pivot, signaling that they see their future less in selling physical game discs and more in the volatile world of digital assets. When GameStop reports, nobody is really focused on how many copies of the latest PlayStation game they sold. Instead, the market will be dissecting every word from management about their crypto strategy. What's the plan? Are they becoming a de facto Bitcoin holding company? This move into Bitcoin makes their stock even more unpredictable, tying its fate directly to the whims of the cryptocurrency market. Their earnings call is must-see TV for anyone following market oddities and the ongoing power of retail investors to shape a company's destiny. This is a high-stakes bet, and we're all watching. As if that weren't enough excitement, we have another maverick innovator in the spotlight. Tesla is expected to launch its long-awaited robo-taxi service on Thursday. This is a moment that Elon Musk has been promising for years, a cornerstone of his valuation argument for the company. A successful launch could revolutionize transportation and send the stock soaring, proving that Tesla is more than just a car company, it's a leading-edge AI and robotics powerhouse. However, any delays, glitches, or regulatory hurdles could be a major blow to investor confidence, raising questions about the company's ambitious timelines. All these disparate events, an inflation report, a tech conference, earnings from a software giant, a meme stock's crypto play, and a robotaxi launch, are not isolated incidents. They are interconnected threads that, when woven together, create the fabric of the market narrative. They give us a comprehensive snapshot of the economy's health, corporate strength, and the direction of technological innovation. By paying close attention this week, you gain invaluable insight into consumer behavior, business investment, and the big-picture trends that will shape your financial future. This is how you stay ahead of the game. Don't just watch the ticker, understand the story behind it.